Well, guys, there's been absolutely nothing that's happened since the last show, so I have no clue what we're even going to talk about today. Assassination attempts, uh, people dropping out of elections, markets dumping and breaking out in inverse correlations. Yeah, maybe there is a little something to chat about today.
I think that whenever we take a break is when all the things seem to happen.
Yes,
I don't know
exactly.
why it works out that way.
Yeah, let's just jump right into it. So, actually, the scariest chart of the day. Let's start with that. We've got the Nasdaq that's down over 3% today,
You know,
breaking monthly support. Is this the top? Is this the end? Is everything over?
I may or may not have done a class about managing your portfolio in high risk markets for the community last week. And might I say, this correction is timing itself mighty finely with that presentation that I did. So, I'm not surprised. I don't think our community members are surprised. I think that things are kind of going as expected at this point with the way things were set up in the market environment, the valuations, the looming Fed cuts that potentially lead to markets correcting historically. So talked a lot about that, but yeah, can't say I'm surprised. But what I am surprised about is the negative correlation with the equities indices and Bitcoin. That has been quite fun to watch.
Yeah, so this actually started back in early June, the inverse correlation. So from the start of the year, both stocks and crypto were up, and then they pulled back together. And then back in mid-June, stocks broke out to a new all-time high and Bitcoin actually pulled back. And now, just over the past week, we've actually seen Bitcoin rising again as stocks pull back. So, yeah, it's absolutely an inverse correlation right now, which is, I think, interesting. Will it last forever? Probably not. But yeah, the capital flow has been interesting. And even this week, we saw the launch of the first Ethereum ETFs. So if you guys are watching the video, you can see there's no real price history yet. So there's, we're in kind of price discovery mode and trying to get a read on what the demand and what the trading volumes are going to look like. So yeah, that's been interesting to see just over the past like less than 48 hours. But Trav, I know you wrote about this in the Daily Doe, kind of the difference between Google and Tesla. We're in earnings season and Tesla's down, over 10% today. Pretty much everything's red. Apple, Amazon, Google, Microsoft, Meta, Nvidia, Netflix, and Tesla all red today. What's happening?
I was told that mega tech would never go down. All right. I'm mad. No, I'm just kidding. No, tech it was due for a breather. But it's interesting because I didn't think Google earnings last night were that bad. Google earnings looked actually pretty solid. Like they've had now 5 straight quarters of operating income growing at a faster pace than revenue. Pretty robust growth still, to be honest. But these stocks have run a lot. The Nasdaq is still up 25% over the past 1 year time frame. So it was due. And, these corrections are actually pretty healthy in my mind, at least for large tech. And we've also seen small cap stocks actually surging in the past 10 days or so. So that has been a nice reprieve there from what we've seen over the last couple of years, where only mega tech was, rising, it felt like, and small caps were still basically flattish over the past year. So that reversed a little bit in the last 10 to 12 trading sessions. Now today, everything's down, but it was nice to see a little bit of outperformance there for small caps, at least for like a week or two. But, it remains to be seen whether or not that rotation will actually be a longer term shift. Like we've seen that shift become a major shift in like the 2001 to 2002 timeframe. We saw it again in the post GFC timeframe. We saw small and mid caps actually do pretty well. But, I think it's going to take a decent economy. And right now there's a lot of worries out there over a softening economy. We could talk about that. And certainly big tech would not be immune to that. The other thing I think that's factoring into big tech is Tesla. Tesla's earnings, unlike Google's, were not that great, to be honest. It was a pretty meh quarter for Tesla, and Tesla stock had run like 60+%. I think even further than that at one point over the last couple of months. And so, you got to deliver the goods if your stock's going to be up that much. and Tesla didn't really deliver. They had a pretty weak performance overall. They are still seeing a year-over-year decline in earnings. It's the fourth straight quarter of year-over-year decline in earnings for Tesla, and revenue only grew 2%. So for a business that's supposed to be, a long-term secular grower, 2% revenue growth and declines in earnings are not what you want to see. Now, the bulls will say, hey, listen, Trav, it's all about the robots. It's all about the robo-taxis. It's all about these future promises Elon keeps giving. But at some point, you got to look at Elon and go, all right, man, where's the beef? Like, where are the products? You keep telling us they're coming, that they're going to be big contributors to Tesla's bottom line, but we're just not seeing it yet. So I think that today the reaction, makes sense to me, at least for what we're seeing currently. So again, none of these things are that concerning or that surprising to me. And I think overall pretty healthy on average.
Well, I think full service driving is coming this year for the 10th year in a row, right?
That's right. Yeah. Full self-driving. Yeah. So now I guess Tesla is going to have their big robo-taxi day on October 10th instead of August 8th. But the question is, okay, so what does it mean? What does it mean to have a robo-taxi reveal event? What does it mean to launch robo-taxis? Because, we already have Cruise and Waymo offering robo-taxi service in the US. We already have companies like Baidu that are doing thousands of rides every week in China. So Tesla kind of looks like they're a little bit behind at this point. They have FSD that they roll out in beta to a lot of their drivers out there on the road. But, the whole robo-taxi narrative is looking kind of stale, frankly. So they better get something out. They better get some service launched. And I think we will see that probably in the next year at some level. But then there's going to be a long slog of competition, of regulatory backlash. I mean, if we thought the regulatory backlash over Uber and Lyft driver pay was a big deal, well, wait until we get a couple of autonomous car crashes and, some of these cities and counties start rolling out regulations against the full self-driving. So I think it's going to be a really interesting couple of years for self-driving. It's going to be a lot of fits and starts would be my guess. So
it looks like, some stocks are being held accountable for their lack of performance. What's happening on the consumer and just the general economy side? I saw interest rates were slightly down on, more, at least mortgage rates. And I don't know what's the read on the consumer out there, Nick?
Well, we did get retail sales, and I didn't think that it was bad. I think like autos and gas, those were down, and so that did pull it pulled the headline number up actually, or when you take out autos. So it actually looked better than we thought ex autos. So I think that it's not bad and it's not super exciting either. We're just kind of lukewarm with the consumer right now. We got the S&P services PMI, I believe it was, and that looked pretty good actually. That showed services looked strong or stronger than expected. But there are different ways that it's measured, and we just kind of have to keep an eye on all of the different data points and kind of put together this picture. And really the picture is right now, yes, the consumer is slowing down in relation to where the consumer has been, and I think that consumer discretionary earnings is going to reflect that. But we have to remember that we can slow down and not be in a recession. And so that's kind of where I think we can't conflate things yet until the data shows us otherwise. But we can see the consumer take a breather, which they are, and we can still see the consumer be okay and not go into this, downward spiral of recessionary territory. If we do see a recession, it's likely to be very mild based on where we're trending today. So, of course, anything can change that. That's why black swans exist. But I don't really think that the consumer is bad, and I don't think they're great either. They're just kind of hanging on. Maybe the interest rates are helping that a little bit. People that are getting money in their money markets and their high yield savings, the savers are doing well. They have that money to spend. But it's very clear that the other side of that spectrum, they are having issues. Delinquencies for credit cards have been going up. That's concerning, but the overall picture, it's kind of balancing out, so to speak.
Interesting.
Trav, did you see anything from bank earnings that kind of spoke on that note as well?
Yeah, it's a good question. I've been monitoring the, first couple weeks here of corporate earnings, and the big banks are definitely a big part of that. So they seem to be a little bit more cautious versus last quarter. They're definitely noticing some slowdown in certain categories, but it's still really the same story overall, which is that, the low income consumer has been hurt for a while by inflation. Everyone else seems to still be doing okay. And the economy still seems to be growing, albeit at a just slower pace right now. And so that seems to be where we're at. We'll keep watching what's happening with overall corporate earnings here over the next couple of weeks. But yeah, the big banks didn't call out anything, shocking or concerning. It's just that, hey, they don't seem that thrilled with the performance of the economy. It's not accelerating, certainly. If anything, it is slowing down a little bit. Like you said, though, even if we're at 2-3% growth, that doesn't put us into recession. We'd need to see something fall off a cliff here in terms of the consumer spending or retail sales, which we're just not seeing. Even though we are seeing slowdown, we're not seeing that. And we've had, now we've had interest rate cuts at the Euro Central Bank. They had, one cut so far this year. We've had the Canadian Central Bank cut twice. The market is saying that there's almost like 100% probability of a cut by the September meeting with the Fed. There is a Fed meeting next week, but expectations are they'll leave rates unchanged. But, we do think there are cuts coming down the pipe, even here in the US at some point later this year. So the Fed is once again going to try to thread that needle. The economy may be slowing, unemployment rising slightly, but then all of a sudden you got the Fed coming in with cuts later in the year. And hopefully that just keeps things in this stable equilibrium at, call it 2 to 3% GDP growth or 2 to 3% real GDP growth. So that would be the Goldilocks, soft landing scenario that we're all still hoping happens. We don't see anything that tells us that it's going to be anything other than that right now. But again, like you said, we just have to stay vigilant and keep watching all the indicators. And that's kind of where we're at.
And we also have to remember, right, Trav, that historically, like, retail sales are kind of coming back to levels that they've been at before the pandemic started.
Yeah.
And I just think that even with GDP, if we saw 2% GDP, everybody was happy and, dancing around like, great, right? So it's like, we have to remember that we're coming off of this pretty insane time where we saw dramatic expansion in this economy that just isn't normal. And so we're kind of starting to see things shake out and settle out, which I think is a good thing. And then that'll give us a new baseline to kind of gauge things off of after having the roller coaster ride that we did with the data.
Yep.
Well, something that hasn't fallen off or faded is interest in Bitcoin. Taking a look at the ETF flows here, what I did is I put a 7-day moving average on the ETF flows, and you can see on average they're attracting over $150 million a day in capital still, which I think is still very impressive. So, that obviously, for you guys watching the video, you can see that, positive flows or negative flows does correlate with price, but if we go back to early July, that's where that consistent flow has just really kind of been increasing over time. And so I think it'll be interesting to see what happens, after a week or two of Ethereum ETF like data and just see how much the demand is for that. On the first day, there was about $1 billion worth of Ethereum ETF flows. And so that's pretty good start. It beats the hell out of most new ETFs. But yeah, I like to zoom out and just kind of think in terms of averages. And even though, prices in stocks are coming down, Bitcoin's still holding up, and it absolutely squeezed shorts. It got below the 200 period moving average for the first time in 2024 and did what happened last summer, where it stopped a lot of long positions out as it closed below the 200 period moving average, which is a big indication of longer term market direction. Consolidated and then squeezed shorts. And I had not had any kind of hedge or any kind of short position on since the bull market started. And then what I did is I bought some insurance in mid-July as price got below the 200 period moving average. So I put on a partial short hedge to say, okay, if the 200 holds as resistance, I don't want to, I want to basically protect some of my long position. I didn't close any of the long. In fact, I actually added back in May. And then as it started to come up above the moving averages again, I closed that short. And so I'm now back to 100% net long, looking for dips, looking for breakouts again. And you can see, I mean, this would be, if we got back to 70K, that would be the 6th test. And so, what does the market like to do? It likes to shake as many people out before making big moves. So the fact that we made a lower low, the fact that we got below the 200 period moving average, and now we're still hovering around this 65K price magnet. You can see we've been over under this thing since really late February. So 1, 2, 3, 4, 5, 6, 7, 8, like 9 touches of 65K over the last several months. The longer we consolidate, in my opinion, the more bullish that is. And when you look at a yearly or a monthly or a weekly chart, this to me seems more like consolidation for another leg up than a market top. That's my opinion. Obviously, anything could happen. I could be wrong, but that's how I'm positioned. What do you guys think?
I was actually trying to figure out like what is it that's driving Bitcoin running, while the risk assets like the equities are selling off. And the only thing I can come up with is political turmoil. Like what is driving people to be buying Bitcoin after that fake out breakdown? Like what's the driver?
Well, I think, as the odds of a Trump victory increase, which that's something I wanted to talk about too, is the polling numbers versus the prediction markets. I think that's kind of an interesting story there. But yeah, I mean, the anti-crypto party looks like has a much lower chance of continuing their bullshit. So, what happens if Trump gets in office? He's going to be speaking in Nashville this week at the Bitcoin conference. So, he's come out and had a very pro Bitcoin stance. He's been talking about putting people in power that are pro Bitcoin. So yeah, I think that people are buying in anticipation of that. Now, if something happens and, Kamala Harris or someone else on the Dem side wins, that I think would take a massive shot to the crypto space. I mean, they have proudly been beating their chest as the anti-crypto party, which again, I've said this for years, how stupid that is. Like, who gets behind that? I know some Americans are like annoyed with crypto, but like, who truly hates crypto other than the establishment? It just makes no sense to me.
A lot of people hate crypto.
Well, a lot of people are annoyed with it, right? Like a lot of people don't like NFTs and a lot of people got scammed and a lot of people lost money with FTX. But let's not even say crypto. Let's just say Bitcoin, right? Like who really what reason is there to hate Bitcoin? The only people that really hate it are those that are in power that would lose something if the establishment got flipped upside down. I don't know. What do you guys think?
It's interesting though, because it seems like the Democrats have walked back a lot of their anti-crypto stance just in the past 3 or 4 months. It seems like that they realized that was an issue with some of the younger voters. And, I think that's why we saw the Bitcoin and now the Ethereum ETFs in particular get pushed through a lot faster than we expected at the beginning of the year, or at least, sometime last year. So that's an interesting shift. And I thought I saw something. Wasn't Kamala looking to actually try to speak at that Bitcoin event as well in Nashville?
I did hear that.
It came out that she's not coming.
Okay.
I actually tweeted a bit about this yesterday when it was reported that she was going to speak. I love posting the little GIF that says "Do not come," and this is what I said today. I said I absolutely hate the fact that crypto has become a partisan issue since it's meant for everybody, but when there's one party that spends 4 years trying to kill the entire crypto industry with their anti-crypto army, they really have no damn business coming to industry events. And I still stand by that. Yeah. And I think it is smart that some Democrats are walking it back, but you've still got idiots like Elizabeth Warren and Gary Gensler and their whole little crew that are trying to destroy and kill and eliminate crypto in the States. And that I think is a huge mistake. And talked about this on prior shows, how this could be a Bitcoin election, right? So that talking point is very, very important. And I don't know, is it too late for them to draw back? And do the Democrats, would they even really be genuinely behind Bitcoin? I don't think so.
Hard to say that any politicians are genuine about anything these days.
Yeah, that's true.
But maybe
Yeah.
I'm very jaded now.
Yeah, and look,
No.
I'm not pro Republican. I've always said I'm politically homeless. I think red versus blue is a scam. A lot of what we're seeing, I think, is pandering. But Trump has been very vocal that he's pro Bitcoin now. And is he completely lying and going to pull the rug if he does get elected? I don't think so.
He must
That
have
could
a
happen.
fat long position or something. I wouldn't be surprised if all of them, even Democrats that are against it, are exposed. That
JD,
wouldn't surprise me.
yeah, JD Vance, the VP, the VP for Trump. It looks like he had some Bitcoin in his portfolio that was revealed once he was elevated to that VP nomination. So
That was
that's
another
definitely an
huge
interesting
thing.
angle. Yeah.
Oh.
So yeah, I think it's very interesting. The Trump trades have already started as well. You mentioned when we should talk about the prediction markets, but the prediction markets and betting markets, various different ones have been indicating, particularly in the wake of the assassination attempt, Trump's popularity and probability of being elected has surged. And because of that, we've also seen certain sectors and certain stocks in the stock market moving both up and down. So we've seen sectors like solar get hit because there could be, a repeal of subsidies in that sector. But then we've also seen, other stocks rising that could be potential beneficiaries. So things like manufacturers or, other stocks that could be viewed as, having some positives with Trump coming into office. And so it's going to be very interesting to watch that. We've also seen there could be implications for the dollar. A big position for JD Vance, for instance, is that we should use the dollar as a tool to try to draw manufacturing back to the U.S. And start to put pressure on, a lot of the lower cost Asian countries that have pulled out manufacturing jobs over the last couple of decades from the U.S. So that could be another interesting angle. There's, of course, the defense industry. There's things like even mergers and acquisitions. The FTC and the DOJ have aggressively moved to block almost any large acquisitions over the past few years. So you could have the prospect of maybe more lenient regulations around M&A if a Trump and a Republican administration come into power. So that is actually starting to reflect in some of the arbitrage trades and the merger arb side of things. So there's definitely some interesting financial implications. And like you said, that's really what we try to focus on. We don't try to play favorites or sides. We try to think about, okay, how does this change our portfolio? How does this change our approach to markets and to different assets?
Yep, absolutely. Yeah. I mean, I think, to your point about the prediction markets, like this is a theme that I think is becoming more and more popular, is that you can't really trust polls. There's so many different problems with pollsters and the predictions on that side have just been terrible. But now we actually have prediction markets, which I think is super interesting. I actually wrote about this in the Doe. It was today's Doe, talking about trusting the market, not the polls. When you have people that are actually putting skin in the game, I think money speaks louder than people just getting asked for their opinion. What do you guys think? Is this more accurate, or do you think it's going to be just as unreliable as polls?
I think it's actually both. I mean, I think they tend to be more accurate in a lot of cases that we've witnessed over the last couple of years. However, if you go back to the 2016 election, I believe even the prediction markets were still predicting a Hillary Clinton win, and of course that didn't play out. So they can be wrong, and of course they will shift over time given new information as well. So they're not complete truth, but they certainly seem to be better than a lot of these polls that are taken by what they claim to be reputable organizations doing polls, but there's just so many biases and sample size issues with a lot of those polls. So I think, when people are putting real money on the line, that tends to take in a lot more information, I think, and be a little bit more predictive than, your average national poll or whatever.
Yeah. And something that was kind of evident was, I think the world knew that Biden had a really high chance of dropping out, despite him saying, I'm here to stay, and whatever shit. People were like, I don't think so. And the prediction markets accurately caught that one, while the mainstream media was not being truthful about that narrative at all.
And I think one thing that I've been thinking a lot about lately is just the destabilization of society in general over the last decade or two. And I know, politics probably most generations feel that things are deteriorating over time, especially as it relates to politics. But truly, I think if you just look at what's happened just in the past couple of weeks, the erosion of trust in things like the Secret Service, right? How do you allow someone to get that close to assassinating a major presidential candidate? And can you imagine? I mean, I think stock markets would have been limit down had that assassination attempt been successful. I mean, we would have had, I think, just total turmoil and chaos in the United States. And, I shudder to think, I actually heard a funny theory, which was that a time traveler came back and saved, saved Trump. I don't know if I buy that, but
tapped him on the shoulder. Huh? Yeah.
Yeah,
Oh,
exactly.
It is a scary thought though, because like there are a lot of people that like wish that the assassination worked and like he died, and I just don't think that's a good place for America to be, is for people wishing death upon each other and all of that. And that's where like we have to stop and look at our politics and be like, okay, I don't know if this is working for society anymore.
Yeah.
And
I don't care what side you're on. If you're wishing for the death of the president, if you're a U.S. citizen, if you're an enemy, who cares? But if you're a U.S. citizen and you wish for that, that means you don't really understand the implications of like what that leads to. It's not good for anybody.
We're
Right.
so charged and divided as it is today. I can only imagine if that attempt was successful, what that would have spun us into. I don't even want to think about it. Yeah,
Yeah.
you guys are right on that.
Yeah, we're talking an inch or two difference, man. It'd be a totally different world.
Yep.
But yeah, I don't know. It's definitely an interesting time. We're late July, so August, September. We've got, basically 3 months. We've got a quarter left until.
But it is weird. Like I sat there and watched the interview and watched Biden say, like, I'm not stepping down. Only God himself can get me to step down, or whatever it was that he said. And I just think that things are getting a little hairy out there. And how can you really trust what anybody is saying in terms of politics at this point on either side? And that's where I struggle.
Yeah.
Can't trust
Yeah.
anybody.
And that's what I mean, a lot of destabilization and erosion of trust in some of these institutions. Even though the assassination attempt was unsuccessful, there are a lot of things that have happened in the last couple of weeks. And also you mentioned, with regard to Biden's health and the fact that he, wasn't around for a couple of days after, he reportedly announced he wasn't going to run again for re-election. There's just a lot of, I guess destabilization is the word I keep going back to, and that may be why we're seeing more volatility here in the last couple of weeks here in the markets, because, markets are going to respond to that. Like if we don't have stability in our major institutions that are governing, the country or governing the world, like that has real consequences. It has consequences not only for daily life, but also for portfolios. And so, yeah, I think we need to rebuild a lot of these institutions like ground up. Like there's just whoever's going to do it, whatever party or whoever is in charge, like there's a lot of work that needs to be done here in over the next few years to rebuild, because like, frankly, I mean, this is a clown show, right? Like what we've seen over the last few weeks has been a total, utter clown show. And it has a real impact. So
yeah.
Go
Go
ahead, Nick.
I was just going to say, with all of that said, we do know, because people ask about this, like, how do I position my portfolio going into a red or a blue wave, right? And although there are short-term implications to certain sectors of the market, when we look at the overall market, it's gone up whether blue or red has been in office over time. So don't get too focused. If you're long-term, don't get too focused on that, going into this and trying to make all these adjustments in your portfolio that you may look back on and be like, oh, I guess it didn't matter, because
that's a great point.
It's gone up either way over time.
Yeah, I guess the doomer in me wants to say, well, yeah, it has, but like Trav was saying, if we lose faith in these institutions and things continue to deteriorate, could get bad. But one thing I think people are kind of waking up to is why things have gotten so bad in certain areas. Like, for example, I was talking to my dad, who actually used to work very closely with the Secret Service. And I said, right after it happened, I said, Dad, what the hell happened? Is this, listen to all these conspiracy theories, right? Which they sound crazy until they're not, right? Until it's like, oh yeah, no, that actually happened. I said, is this something planned? Do you think it's just incompetence? And he was like, I think it's incompetence. You know, we can talk about things like Occam's razor and things like whatever the most simple explanation is. And then, you know, looking at how, you know, probably stupidity and laziness is more likely than some grand scheme by the CIA. Again, I wouldn't be surprised by anything, but he seems to think it was going that way. And I said, well, how did we get here? How did the Secret Service, which is supposed to be the baddest ass people, right?
Mhm.
He goes, oh, just look at DEI, you know, look at what happened, you know, a few years ago, you know, they tried to not hire the best, but hire for diversity. And yeah, of course we want diversity. Of course we want to give everybody a fair shot. But when it comes to protecting presidents, you want the best of the best. You don't want to try to placate and say, we're going to throw women in there that have a 30% less capability among all the metric points that they look for, you know, in other industries. Okay, fine. But when it comes to something like that, that's where I think, you know, you can just deteriorate the quality and people lose trust.
I mean, I would have done the same thing that girl did. I would have froze. I would have not known what to do. I would have
Hid behind him
I would
instead
have
of
hid-
jumping on top.
I would have hid behind the men, you know, like, and this is coming from a lady here. And I just, there are just some jobs that I, as a woman, do not want to do. And that's okay. Like, that's okay.
And I know that there are some badasses, badass females in the U.S. military.
For
Like
sure.
I've met a few of them, but you know, it's not 50-50, right? And so like if we have arbitrary goals to have, you know, a 50-50 representation in something like the Secret Service, well, that doesn't even match like the amount of people who train for that job. Like the people that want that job, it doesn't break 50-50 naturally, right? So why are we trying to put 50-50? Yeah, I mean, so we could go on that topic for a long time and probably piss a lot of people off, but but yeah, there's some basic logic flaws there, I think, that have real consequences. And you know, you go back to you mentioned incompetence versus, you know, was it a conspiracy, was it planned? Honestly, I think it could be a little of both. You know, I think there are probably some people that maybe could have taken action that didn't, that kind of allowed something to happen that otherwise wouldn't have. And there's also probably some people that just didn't communicate when they saw that there was a potential threat, and they didn't escalate that threat enough through the chain. Maybe there was some miscommunications between the local police and the actual Secret Service on the, you know, on the stage. Like it's probably a combination, honestly. So,
I agree. At some point, incompetence is like being complicit, right? And
yeah.
At least she stepped down. The director, I saw, you know, the hearing the other day was a damn disaster, and they were calling for her resignation, and she was stubbornly not giving answers and also saying she wasn't going to quit. Well, thankfully she did resign. I mean, I think that was absolutely necessary.
It was nice.
You got to reinstill belief.
Yeah, and it was nice to see some bipartisanship on that whole issue. It was like both sides were grilling her.
They were.
Both sides were like, what? Like, how could you let this happen? And how could you show up to this hearing with absolutely zero information and still act like you want to have this job? Like, oh my gosh. Yeah, I'm great. It's great to see that she resigned. She did not deserve to be, or she did not, certainly after what happened, deserve that position. So that's a good start. We got a long way to go to fix a lot of what's wrong there.
Absolutely.
Long way to heal America.
Yeah, I mean, okay, so I guess back to the point of like, why is Bitcoin going up? It's because people are losing faith in the institutions, and you know, we're seeing a potential Bitcoin friendly president, which I don't know. Let's just
if Kamala wants to speak at the crypto event, is she not like going the friendly route? Like, why would they have her speak at the event if she's not going to be crypto friendly?
She's
right.
She probably wouldn't say anything.
What is she going to talk about? If she's not going to go to a crypto event and be like, crypto needs to be banned, you know?
She might be like, money is a currency.
Unburdened by what has been.
Let's not let the dollar be unburdened.
Stop
I
it.
don't even know.
Move on. Let's move on quickly.
Yeah, we're going to piss a lot of people off. I don't care. Listen,
the memes
it's a
are
wild
flying.
time out there.
The memes are flying on both ends. On both
memes
sides.
are fire.
Yeah.
Yes, social media has been fun lately. Anyway, okay, so we're mid-range. We're still at the multi-month magnet price of 65K on Bitcoin. We've got indices that are down. Is there anything that's actually outperforming on the stock side? And actually, I wanted to zoom out and just talk about the monthly chart too. I mean, even though we're down big today, I mean, you can see the macro trend. I think, Nikki, to your point, this is why you don't want to just freak out, on any kind of pullback. But yeah, what are either the industries or the sectors that are outperforming or could potentially outperform with a red or a blue wave?
Yeah, I mean, we mentioned a few already. Like underperformers are pretty clear. It's things like Chinese stocks have been another hard hit area because Trump has talked very tough about increasing even more tariffs on Chinese companies that are attempting to do business or providing manufacturing for U.S. businesses. So Chinese stocks have been weak again. We've also seen weakness in the solar industry. In fact, we have a couple of solar companies that are on the verge of potential restructurings or bankruptcies. So SunPower and Maxion Solar and a few others in that industry have been pretty hard hit. Even First Solar, which I would consider to be the best company in the sector, has had a pretty big pullback in its share price. So we're definitely seeing some stuff there. It's not as obvious across other sectors yet. I think those are the most obvious ones, but I think people are starting to think about, okay, who benefits from reshoring, who benefits from greater dominance in U.S. manufacturing. And so we're starting to look at a few stocks, particularly small and mid cap ones on that front. Things like currencies are definitely another interesting one. We've seen like pretty big moves in the US dollar yen pair recently and just in the past couple sessions. So there could be something happening there. And, I think there's even individual trades like the whole Fannie and Freddie preferred stocks, could move potentially on a Trump election. So there's definitely things out there still that have more potential, particularly if we get, actually into a situation where we get not only a Trump presidency, but also a Republican control of Congress. So Senate and House, that would be a pretty big shift as well. So that's going to play a big role. And so this is just beginning, people trying to position their portfolios for these types of things. I'm not sure it's like Nikki said earlier, I'm not sure it's worth making wholesale changes, especially if you're a passive investor. But one thing that, outside of the Trump trades have been the shift from large cap to small cap. And we've been talking about this for years, but small caps were definitely outperforming. Interest rate sensitive sectors were outperforming over the past couple of weeks as we've had a drop in rates as we anticipate more Fed cuts. So things like home builders have been performing, they caught a big bounce. Regional banks and just big banks have caught a big bounce in the last couple of weeks. And I think the Russell's still above its 20-day moving average, whereas like the NASDAQ is well below now. So we have seen that trade again. I think it's tough because I don't know if you necessarily, even though small caps are trading at like still a 7 or 8 point multiple discount to large caps, do you really want to pile into small caps if you expect that the economy will weaken from here? Because a lot of small caps are very economically sensitive. So it's still pretty tough. I mean, again, I think making wholesale changes, not really what I'm trying to do, but making maybe some small tweaks or looking for one or two plays here or there is kind of where I'm trying to make changes.
Awesome. Well said. I wanted to pull up a couple of tweets. Nick, you mentioned this one from, I don't know how to say his last name. Nick said, hot take, your asset allocation should change more with your wealth than your age. I think a lot of people like pin their risk tolerance to age, but if you maybe link it more to net worth, maybe that makes sense. He says someone in their 30s with millions of dollars should be taking less risk than someone in their 50s with thousands of dollars. I don't know, that's kind of interesting because longer time horizon, more risk, but also bigger amounts. If you go from like capital allocation to capital preservation. Nick, what do you think about that?
I loved this take. I totally agree that, even thinking about like our own, finances and where we're at, it's like when you look at your wealth and you're hitting those numbers, you're getting to the point where your wealth can actually do something really good for you, or you can retire early if you want to. Some people don't want to retire early. They want to keep going. That's fine. But you really have to kind of flip the mindset. It's like, okay, I've made this money. Now, how do I protect it so that I don't have to go backwards, right? And if you are young, and you've made a bunch of money, but you're taking on too much risk, or you have too much concentration, or something in your portfolio, is could really undo where it got you to. I think that's something worth looking at. And I know that once you hit your quote unquote fire number or escape velocity number, or whatever way you want to frame it, however you want to call it, you do naturally kind of go into, okay, how do I keep this money, right? I've made it. How do I keep this money? So I think that you could be in that situation at a very young age, in your 30s and your 40s, which is young in the grand scheme of our lifespan. So I do think that we should be paying more attention to our asset allocation based on our wealth level, and not only focusing on our age. Yes, we're young, we can take on more risk, but is that the smart thing to do with where our wealth got us to? Is kind of how I like to frame it. Granted, yes, you do have more what do they call it? Working capital, or like working capital. So you essentially have yourself, you can go, you can work, you can make more money because you have more time. And that does allow you to have more risk capacity and take on more risk, but that doesn't necessarily mean that you should be. So I think that when looking at your wealth, always look at, okay, where am I today? What can this wealth do for me today, and based on what I want it to do for me for the future, and kind of make sure that you tweak your allocation to fit that, because you don't want to be in a situation where you made enough money to get through and you feel good about it, but you're like 100% in Bitcoin, and you're super concentrated in one asset class that's really, really, really volatile, that has not 70 to 90% drawdowns. It's like, okay, that's where you reach that wealth level, pull some of that risk off the table to kind of lock it away, keep it safe, preserve it, but you can still keep that allocation to that risky asset and just do it within reason. So I just really liked that framing, and totally
Yeah,
agree.
I would agree. Like most people that I've talked to that have even gotten rich in crypto, like they'll never say this on crypto Twitter, but in private conversations, they'll be like, "Hey, man, all right, I made it, but I'm a little freaked out," And I think the natural progression is you get a lot of money and then you diversify. So even if Bitcoin goes to zero or a company goes bankrupt, you're not going to end up where you started. All right.
Right.
And again, it's not a popular conversation. It's almost like heresy on Bitcoin Twitter to say, "Oh yeah, I'm rich now. I'm gonna diversify into other stuff." But almost every smart person I know does that.
Mm-hmm. Yeah.
Cool. All right. Well, guys, I also wanted to mention we have a few spots left in our wealth building retreat coming up in September in Austin, Texas. Just go to wealthbuildingretreat.com and we're going to have three nights, 4.5 days or whatever of training, networking, one-on-one access to Nikki if you want to get a look at your portfolio. And, we're going to have a good time. Looking forward to it.
Absolutely. It's going to be a good one.
Yeah, man. Anything else you guys want to mention before we wrap it up? What are you guys looking forward to over the next week? All that good stuff.
Next week's definitely going to be a busy one. We've got Apple, Amazon, Meta, and Microsoft reporting earnings in addition to like hundreds of other companies. And then we've got a Fed meeting as well. So throw Jerome Powell into the mix. And of course, now we're in a pretty hefty market correction, at least as of today, pretty big move down in the indices. So we'll be keeping an eye there on what happens. And so, yeah, it's a very exciting time after a little bit of a summer lull.
Yeah, let's get some volatility going, man. Like I said, I mean, we've got a quarter till the election, so things could get kind of wild here, I think.
Yep. I like when things go on sale too.
Hell yeah. Nick, what about you?
I think that's the biggest thing, is like looking for stocks that are on sale. So like, for example, I'll just throw out a few names that we've been talking about in the community, like Lululemon and Ulta. They're starting to really sell off. These are names that I've personally been investing in for years, but core positions that, are potentially giving opportunity. So if the broad market continues to sell off, well, we may see some of these names that have historically been a little pricier start to maybe look a little better. And yeah, we know that the consumer's slowing down, but we are buying stocks at value in anticipation that they in the future will do well, right, and recover or whatever. So I think that just kind of paying attention to what's really selling off and starting to get into value territory that's been pricier to own, and it's still giving us, good growth, a great business, good fundamentals, good balance sheets, all of that stuff. So
Yeah.
I think that just paying attention to the value, like you said, small mid caps, those have start digging through those. And even the larger companies could start to really show value if this correction gets deeper. So just paying attention. It's what do we call it? It's hunting season. Is that what we say?
Absolutely. Yeah.
Yeah.
I mean, I even think alts are back on. I mean, you can see here, like at total 3, things were looking really gloomy on the daily. We got below the moving averages, snapped support, and then here we are right back to equilibrium. So when you zoom out and you look at like some large cap cryptos, it's like not everything is still in bull market territory, but there are some charts like Solana and probably about 5% of cryptos that are actually showing like real alpha over Bitcoin. So yeah, I mean, I think as long as the poly market election is showing a red POTUS, I think that's going to give confidence to the crypto community. If for some reason that shifts, yeah, man, we were 2 inches away from ending the bull market, I think.
Oh.
Yeah.
Oh, that's another thing we need to watch out for. Bitcoin's not that far from all-time highs again, so that could get rowdy. So
Yep.
we'll be watching
Absolutely. That would be the 6 test. That's what I'm looking for. Bitcoin all-time high test and Ethereum ETF flows. Let's see what happens over the next several days.
Good stuff.
All right, guys. We can go ahead and wrap it up there. Thanks for joining us. Go to wetalkmoney.com, submit a question for the show. Also go to wealthbuildingretreat.com. Join us in Austin in September. It's going to be a real small, intimate group. You can see all the details on that page. Like this up, share it up, and we will see you guys next time. Take care.
See ya.